Hi, it's the analyst from Think Like an Analyst, and today we're going to talk about infrastructure. So now that $1 trillion infrastructure bill may be in the offing, we thought we'd take a look at a few US-based companies that might benefit from increased spending on infrastructure-related projects to see if there are any bargains out there. So Morgan Stanley recently published a report suggesting that if an infrastructure bill passes, building materials could move into what they are calling a super cycle, similar to the one that we saw in the 1950s. So with that in mind, we're going to look specifically at three building materials companies: Vulcan Materials, Marietta Materials, and Eagle Materials. Our objective here is to put some actual numbers to this supercycle story by building a simple model for each company to see what it tells us. Our conclusion is that any expected bump by the news of the infrastructure bill looks like it's already priced in, except in the case of Eagle Materials, where there still seems to be some upside. Let me show you what I mean. So without digging into the specifics of each company, I think we can develop a base case set of forecasts with the information we have in hand. Taking Morgan Stanley's lead, I think we can assume that in the event an infrastructure bill passes, revenue growth will get a bump and will move above trend. I think we can also assume that we will see some margin expansion as increased demand for materials products leads to enhanced pricing power. So let's see what this means in practice. I'm starting with Vulcan Materials and use consensus revenue forecasts over the next 2 years as a starting point. I'm then going to bump my revenue growth forecast up to 10% per year and then carry that forward on the assumption that the infrastructure bill will have a 10-year lifespan. In terms of margins, I've assumed that all three companies can expect improved margins of approximately 250 basis points. So I'll trend them up gradually over the next few years and then carry that forward as well. And then finally, I'm going to leave capital turns where they are, as they've been very stable for Vulcan and for the other basic material companies as well. And really, that's all there is to my Vulcan forecasts. And you can see that it produces a fair value below the current market price and well below the consensus price target, suggesting that the supercycle story is more than priced in for Vulcan. And if we look at the comps here, we can see that while Vulcan's financial performance is comparable to its peers, it's a little bit on the expensive side, which is, again, consistent with our analysis. Okay, moving on to Marietta, we've taken exactly the same approach here. That is to say that we've taken consensus revenue forecasts as our starting point and then trended it up to 10% per year for the rest of the forecast period. And in terms of margins, I've assumed an expansion of 250 basis points. When we look at the valuation table for Marietta, we can see that the model price is very close to the current market price, which suggests that it's fairly priced at current levels. And finally, let's look at Eagle Materials. Again, we followed the exact same generic approach with respect to our forecasts, so no need to go through them in detail. But when we look at the valuation, we find that the model is generating a fair value target of $190.91 versus a current share price of $142.83, suggesting there could be some upside here. And indeed, when we look at the valuation comps, we see that Eagle does in fact look cheap compared to the other companies, at least on a PE and price to sales basis. So in conclusion, while our analysis has been in a certain way a bit superficial, it has allowed us to put some actual numbers to the supercycle story as suggested by Morgan Stanley. And this has allowed us to draw some preliminary conclusions about whether the story is priced into the market or not. I'm going to post the models in the description below so that you can download them and play around with the numbers for yourself. And one other quick note here. In a subsequent video, I'm going to go through the same exercise with a group of steel companies. In the meantime, thanks again and happy modeling.